Welcome to you back to Enrich to this function. And Arvind will be moderating this panel discussion, which I said is, his title is Investing Amidst the Energy Transition. The other panelists are Mr. Nitin Prasad, Country Chair, Shell India. Nitin, if you could please come on stage. Mr. Pankaj Mehta, Vice President, Strategy Development, Reliance Industries. We have Mohit Bhargav from NTPC, Executive Director and heading the renewable energy business of NTPC. He's on his way and should be here in about 5 minutes. So as soon as he comes, we'll have him up on stage. And we have our very own Manish Agarwal. Manish, again, I think does not need an introduction, known to many of us. Manish heads KPMG's Special Situations Group, as we call it, which handles a lot of the stressed assets in the market. He was earlier the leader of our energy and natural resources practice, and now he's taken up this role. Manish, welcome on stage. So we'll have Mohit, as soon as he comes, join us on stage. So before that, I would just put up the poll questions, and we would just like your responses on those poll questions. Yeah. So this is the first poll that we have, and we'll be running 3 or 4 polls during the day, okay? And I'll just read the questions for you. First is, what should the energy majors put their bets on? Okay? And you see those 4 options there. If you could please vote on that. Second is, what is the biggest challenge before the energy and natural resources sector? And the third is, which of the following big bang reforms can address financial distress in the power sector? So these are the 4 questions, 3 questions. And you could please download the app, which is there on the back of your badge. So with that, I'll hand over the stage to Arvind. Arvind, thanks, and over to you.
Thanks, Santosh. I'm proud to be reunited with Enrich, which I helped create about 10 years back, but wouldn't really have been possible without the support of all of you who are in the audience, as well as KPMG. I sort of led it during the first 6 of its formative years. And then, of course, the baton was taken over by Manish and Anish to develop it further to the level which it is today. So, so a lot of the credit goes to them, in that sense as well. What I would like to, this session is obviously very topical, given the fact that we saw that the energy sector globally is, as well as in India, is under significant transition, as well as uncertainty. So what I want to, before I get into the main panel discussion, just summarize some of the thoughts which were there in the first session, which actually provide a good context, if you like, to this particular session. I will not go into all the numbers because I think you would have probably noted them, and just putting quantitative numbers is not enough. What we do know is that, the broad trends which are there, that the energy sector is in transition, and there are many key factors which are influencing it. First of all is the growth of energy demand. To a large extent, it has been and will be led by emerging markets, but with improving energy efficiency and reduced energy intensity. And this has been due to, as we saw, climate change concerns, technology changes, and smarter consumer, not just based on the technology interventions which are happening, but other factors as well. And finally, this would lead to, hopefully, a much more circular global economy. The second factor, of course, what we saw was shifting shares of energy supply sources. With, obviously, we saw in Anish's presentation, scaling up of renewables. To a certain extent in the future, it will substitute, though it will, that's probably in India, coal-based power will still remain a significant share of the power supply source. Having said that, the very fact that renewable share will increase has significant implications and will influence really the whole value chain of coal-based power plants as well as the downstream value chain related to that. The third, of course, is what Anish talked about, is electrification of everything. But certainly going forward, globally as well as in India, it's going to be significantly electrification of transport sector, not just in terms of shifts from internal combustion engines to, I would say, electrified vehicle, whether electric or various other sources of electrification, not necessarily lithium ion, could be hydrogen, could be various others. There's a degree of uncertainty to which would be preferred, and it could be different for, for the personal segment or personal mobility vis-a-vis the transportation segment as well. And the fourth really is in terms of new technologies, and these include but not necessarily only relating to battery storage, as well as lower cost curves in each of these, which is again influencing the transition. Moreover, while we know that the direction of change is clear, the pace of change is not so clear, and that is leading to uncertainty in terms of investment. And given that most energy investments are lumpy and have large and very long gestation periods, this is influencing the investment climate as well. And finally, it's not just in terms of sector-specific factors. We saw Regina talk about some of these global factors, as well as the fact that there are macroeconomic factors due to geopolitics, due to trade wars, which are ensuring that the market environment, not just oil prices, is very volatile. And there are slowing global, I mean, the R word is being used a number of times, we may see the global growth going back into recession, but certainly there is slowing global growth expectations. Having said that, India, which today is not decoupled from the world, right? And we've seen that these same global forces are to lesser or greater degree impacting India already, and going forward may impact much more. And keeping that in view, there will be uncertainty in terms of the energy value chain as well. Having said that, we see that there are certain positive factors which are demand specific. Whether that will translate into supply is a big question which we can debate. But certainly from a demand perspective, most studies and forecasts, including BP, say that, and IEA have said that a large chunk of the future growth in consumption of energy would be driven by India and not by China anymore. In spite of the fact that energy efficiency will come into play as well. Having said that, because of this factor, we see that there is a need for new power projects, whether renewable or as well as in the coal sector, increase in refining capacity as well as upstream and downstream investments in the oil and gas value chain, including in terms of networks, pipelines, etc. So because demand is increasing, there will be need for infrastructure. The question really is, who is going to make that investment and how will it get funded in some sense? Are the players, and as Anish mentioned yesterday, we had several closed door roundtables which included industry leaders and generally, and I've been associated with the sector for more than 20 years, the level of pessimism I saw in that room was perhaps nothing which I had seen in the last 20 years. Amongst the major players, particularly in the power sector, maybe not so much in the oil and gas sector, maybe because there were less players, less people from the oil and gas sector yesterday. But we have Nitin here who can provide that input today. But certainly, and it was not just with reference to the coal-based power plants, which we've seen pessimism for some time in that sector because of the stressed situation in that sector, but also in the renewable sector, which for many years recently was seen as the bright spot in the power sector, basically investment climate scenario. But even there was a degree of, maybe not to the same extent, but certainly the level of optimism which used to exist is no longer there in that segment of the value chain as well. Having said that, we also know that from a financing perspective, a large chunk of the financing historically has been by public financial institutions. And they are under, because of the past sins, so to speak, in terms of financing, bad loans and NPAs have become much more conservative in their financing approach. And not just the banks, but also the non-banking financial system as well. So clearly, there are, if you like, challenges which are there from the health of the sector perspective. And some of these challenges relate to policy environment. Some of it relates to the regulatory environment, particularly the way it's being enforced. Given this situation, it's something which we would probably need to deliberate with during the discussion. Finally, of course, that a lot of there is a degree of moderation in the India growth story as well. So the consumption-led growth, which used to be a good story to talk about from an India perspective, that itself is moderating downwards, while it's still much higher compared to many other parts of the world. The fact that it is going down does also have an implication from the sector perspective. So with that sort of a brief context, let me sort of welcome the panelists here. We have a fairly diverse panelist. I must mention that there have been some changes due to the fact that policy environment in Delhi resulted in, I think, Gurmeet not being available. But fortunately, we were able to request Mohit to come in. Thanks, Mohit, for coming in at short notice. The panelists which we have on my immediate right, we have Nitin Prasad, who's the chairman of the Shell Group of companies in India. Welcome, Nitin. Next to him is Manish Agarwal, who, as Santosh mentioned, most of you know, and he was the earlier ENR sector leader before this thing. But today, Manish is here because he's also leading the special situation group of KPMG in India. Then Mohit, who is basically representing, in some sense, NTPC, not just in his current role as the renewables head, but also because of his earlier roles in corporate planning. So he's very eminently placed to talk in the emerging sector. And NTPC, as you know, has got a big stake in the coal-based power projects and is evolving into the new environment as well. And last, we have Pankaj, who represents the Indian private sector in some sense, but also the other element of the oil and gas value chain, so to speak. So let me start with you, Manish, because since we have the context which I've said, there is a change which is taking place, but there is, particularly in the Indian context, degree of pessimism. So I just wanted, you've been meeting both players which are multinationals outside India, both strategic as well as financial investors, as well as domestic major players across the power as well as oil and gas value chain. How do you see the investment climate? Is it as bad as the degree of pessimism which I saw yesterday? Where do you see the bright spots? Where do you see, companies seeing the opportunity, and what is required to be done to enable that opportunity to become a reality?
Very tough one, Arvind, and
And I just
starting
request
with the-
is that if you can, I know this question can be a very long answer, but I'm just going to request all of you to just spend 3 to 4 minutes on each answer, because I want you to set the context, because I'm sure the others in the panel can also comment on some elements once you provide that overview.
So I think, let me take the first one, which is on the investment sort of a climate and the overall sort of a context. I strongly feel that there's no sort of a dearth of a capital that can come to India, or there are players who are not wanting to invest in India. Having said that, I think what has happened over the last, let's say, 5 to 6 years, if you really look at segment by segment, because I can't really paint it as a one brush, I mean, definitely there is a lot of pessimism on certain sectors within the energy. And that is, if you look at from an outside investor point of view, the first and the foremost is the stability and the predictability of a policy and the regulatory environment. And I think the way probably India has responded, I'm not saying right or wrong, but whether we talk of a complete transition from a one fuel, and we were just talking of alternate fuel rather than talking of overall energy dimension. I think we still don't have an overall energy dimension from a ministry or the government to say, okay, what is our alternative fuel basket, various fuels, what we need to do, etc. So that has really hampered, where we just talk of only one dimension of renewables, and then suddenly said that thermal doesn't sort of survive or can't survive, and you create a stress on the banking system side. So that's a one part of a story. If you really look at the renewables, and I think, there was a morning session as well, I think renewables have disrupted renewables themselves. That's what I feel. I mean, if you really look at the transition, there was no doubt in the mind that we are shifting to a sustainable energy. Global is moving towards that. India has to move towards that as well. But what is the pace that we wanted to move? What are the enablers in the system that we are wanting to cater to that, support that pace? I think that we just didn't do right. And as a result, what you see is what is happening in Andhra, for example, or what is happening on the payment side, on the distribution side as well. That has not really supported that entire vision or a disruption that we wanted. And as a result, you see what's happening on the renewables, which was presented to be the biggest bright spot. To my mind, I think investors are very, very cautious. We are working on some of the last transactions. We have not seen the likes of very large players in renewables yet come to India, because they have a right questions to ask for. If you really, play on the other side of a dimension, which is oil and gas, I think that has been a much brighter spot to my mind. On the refinery side of a capacity expansion, on a LNG terminals, for example, on the city gas distribution side, for example. Obviously, while there are concerns, and again, my personal view is we should not try to do what we did in this entire debate of thermal and renewables when we talk of now the electric mobility to come in, and then say electric mobility is the only way to go, and therefore there's no refinery capacity, the crude import, etc. That one versus alternate narrative we must avoid. And that's what, let's say, the other side of a oil and gas spectrum looks like. On the technology side of innovations or smart meters or the grids, I think the scalability is still being asked and it's still being evolved. The technology is still evolving. While there is an investment appetite, but I think people are obviously wanting to see that what is the scalability. Rooftop is an example, for that matter. I think when we started, the kind of targets that the government has articulated and where we stand today, again, is the same challenge, that whether your vision is supported by the enablers in the ecosystem, and given all that, when people have invested a lot, if you see the last, let's say, leave aside the last 3-4 years, over the 10 years, there's a lot of investment that came in, both on power, thermal, as well as renewables. And when the investors or the developers, especially the private sector, and I can correlate it with them why they had a sort of a view, yesterday when in the forum, when you make these investments and then you suddenly see that investments are getting completely stuck, the credit cycle is not churning around, you will always shy away from actually what is the next level of investment you want them to make.
Right. Thanks, Manish. Mohit, let me get you in next, particularly since there is this perception, since we are talking about sustainable growth, and on the other hand, we saw in the earlier session that we actually shouldn't be, and then Manish also mentioned, it's not about coal versus necessarily renewables, but what is happening is that investors are, shunning, if you like, the coal-based power projects, and we discussed that yesterday as well. I just want you to, as probably the largest player in the thermal power sector, how do you see, let's say, the investments happening in the, let's say, let me first focus on the coal power, I'll come back to renewables and subsequently, but in the coal sector, where do you see investments happen, and what type of investments are also required to protect your existing investments, because you have a large legacy installed base, so to speak. So these two, one, where will it happen in the future, particularly from coal power? Is it going to totally stop, or will it happen selectively in certain areas? Secondly, in terms of the legacy which you have, is there certain investments which you need to make it more viable going forward?
Thanks, Arvind, and good afternoon to you all. Apologies for entering late. So the only thing I could add there was, in the season of uncertainty, NTPC is the only certainty you have. So you wanted my CMD, so I came in because he could. Having said that, I do agree. Coal is actually, a lot of people, maybe in this room and maybe outside, who have been quite eager to write the obituary of coal. So I dare say we're not there yet. At least India isn't, because in terms of disruptions, whether it's from renewables or whatever, coal remains and will probably remain the backbone of power supply in the country for a longer term. Crystal ball gazing is not exactly my forte, so people say 10 years, 20 years. I would say we are still a long way off to actually move away fully from coal. So if I take maybe the CA optimal mix report which came out earlier, so they are saying that India still needs maybe something like another 50 to 60 gigawatts of new capacity other than whatever is there on ground and whatever is under construction. So if we keep that in mind, India does need some more capacity. But I do agree that we are not looking at large coal-based capacity in any case. It'll come more in terms of balancing power, flexible power, because the other options are much more uneconomical as far as India context goes. And which is also probably for a few other countries across the world. So every country charts its own path. So to that extent, coal has a role to play. What exactly will be the number? It's probably too early to predict, but it'll be some. Where will the investment come from? That's a good question. So in fact, we were also on a panel yesterday, so this question was also there. So, and everyone was saying private sector is not coming, so I can't comment on that because obviously the business environment in general for fossil fuel, coal-based and funding from the banks is a larger issue. As NTPC, we don't really foresee that problem immediately, maybe a few years down the line, but definitely we are in a position to raise funds to the extent we need to set up. But for us also, the call will be much more strategic in terms of what's actually going to sell, what's actually required, because we won't be making investments which are not going to sell. So as far as I see, NTPC will be making, quantity and numbers are a separate matter. Maybe some state utilities who are probably better off. So this will happen more in what is required in the country from that perspective, rather than what needs to happen from the pure business context. So that's on the investment part.
So more brownfield and coal phase-based and incremental rather than totally greenfield.
Yeah, you're absolutely right. In fact, I mean, we can make that statement generally, and we have been telling this to everyone, even our investors as such, that NTPC also, we don't intend to do any new greenfield coal-based projects. So what we are looking at, the options in terms of only brownfield and pithead expansion. So we are very clear that the cost of coal-based power in any case has to be much cheaper, and we do not want to burden the entire DISCOM system with more charges which they're not willing to pay unnecessarily. So it will be brownfield and pithead.
Right. Nitin, let me get you in. As oil major and also somebody who's been in India for a while. What do you see as the investment climate? Let me ask, particularly from the oil and gas sector, how do you see the investment climate, and um, where do you see, what do you need from the in policy environment which would make you much more, let's say, bullish with reference to the sector in India?
Yeah, no, thank you. So firstly, just in terms of optimism and pessimism, I'm incredibly optimistic. I think this is a wonderful time for us to be in the energy sector, and we should all be really happy about it. Because the opportunities are great. When do you actually get to talk about a transitioning of a major industry that is core to so many different parts of our lives, and start to do it in a meaningful way that can actually, result in an outcome that's going to be better for the planet going forward. What a wonderful thing to be trying to do at this point. Answering your question more directly, by the way, I prefer to be referred to as an energy company more than an oil company. And it's definitely given that we have more gas than oil. But in terms of the sector, the oil and gas sector, I think that it was said quite well by Manisha. I think that from an investment point of view, that there's tremendous potential that in terms of the industry. I think it has been too easy for us as an industry in the past. You come back and you say you have ever growing demand, and you punch a hole in the ground, make somewhat 15% strike rate, and then you find your oil, you put it out there, somebody or the other will buy it. And by the way, you don't get a choice. Here's your RON 95 or RON 98 or your 100. Take it or leave it. This is the way it is. And then from a financial point of view, that's really easy, right? Here's your cash flow. There's so much demand. Put a big terminal value at the end of it. Put some arbitrary growth rate to it. 30 years later, yes, your NPVs, all your numbers all work out. It's been really simple, right? And I think, by the way, that's all apologies to everybody in the oil and gas industry, should probably be said. I'm sure there's plenty of complexity to the thing. But I think what we're facing is, you use the words quite correctly, is tremendous amount of volatility and tremendous amount of uncertainty. So the riskiness and our sense of understanding the risk that underlies the business that exists is core to our ability to understand what is investable and what is not investable. Now, we can come back and we can diminish risk in many different ways. You can diminish risk from a cost point of view. If you're at one end of the curve versus another end of the curve, well, then your risk profile is a lot lower. It's not very different than somebody else. So you can easily say that perhaps in Middle East, from an oil extraction point of view, your risk profile is very different than if you're in the Arctic, right? And therefore, you have a different sort of view on the world going forward. And equally, you can play that out along the way. You can also play risk in different ways. You can play risk in terms of trying to see how the volatility itself can be taken a look at. And there are many people who play on the volatility itself and find tremendous value being in the middle of the volatility itself. We ourselves are the largest private trading organization in oil and gas in the world, and hence we see tremendous value in the volatility itself. Right? A stable level is not good for trading business. And there's value that is trapped in the volatility itself, and how you manage the volatility, how you create optionality at the back end of that volatility. And the third part of this one, of course, is your demand structures that exist, and demand structures that are enabled from a policy landscape that allows you to be able to access the demand. I think we have historically come back and suggested that two things are very key. There's a command and control mechanism. This is what you get. I will build it, you will take it. Mechanism that's there. But that doesn't exist anymore. Digitalization and customer choice and flexibility has completely changed that, in terms of people want to be able to make a decision as to what is the type and form of energy that they consume, whether it's for cooking, heating, cooling, their transportation, whatever it is that you choose. That's a very important point that's there. Equally, I think we have we continue to think that we can manage this energy system, specifically in many parts of the world, by saying that this is the way it must be done. So there is a singular view towards how it's done, and you can see how that's particularly in India, for example, in the power sector, or even in terms of infrastructure development for pipelines and so forth. This is accessibility. This is how the investment will happen. These are the long-term PPAs. Sign them, and therefore this is the way the industry will work. But again, all of that doesn't work anymore, right? So if you talk about change, from my perspective, change very much needs to be, how do we start to see our infrastructure and our assets as accessible and enablers for different players in the marketplace to come up and be able to utilize them, whether that be in power or in oil or in gas. We've built the infrastructure that's there, and we now need to make it accessible for people to come back with. You can see the transformation that's happened in the UK electricity market just by simply separating carriage and content along the way, and you'll see more models come up as you go forward. And equally, I think we need to come back and say, how do we create more market-based mechanisms that allow a significant amount of what we actually deal in to be determined by a large base of consumers. Banks and financial institutions can always come back and take a look at a market reference number. That is possible. So if you have 20 million or 50 million or 100 million people buying something on a daily basis, and that level of transaction activity, that is sufficient certainty for any financial model to exist. But 5% of the electricity market in an exchange is not enough. And basically a handful of players, not enough. So even as we start to think about a gas trading hub, these are the mechanisms that we need to start to think about, that each one of these things needs to have a critical base and mass for it to become an acceleration into an open structure, and that allows institutions to be able to come back and say that there is underlying price certainty, or there's underlying risk mitigation from recognizing that the market mechanism actually works.
Thanks, Nitin. Let me get Pankaj in. As another major energy player, just to take on from Nitin, how do you see, and being also in one sense representing a large perspective of a large Indian private sector player, we've got different perspectives in that sense, but not necessarily because of that. What do you see as the opportunity, particularly from a oil and gas segment of the market and going beyond in that sense? I'll come back to some of the newer energy segments later, but let's focus on the gas market in particular, as well as where do you see the opportunity, and what do you see as the challenges in the market opportunity from a policy environment perspective?
Thanks a lot, Arvind. Good afternoon, everyone. I think my job is a little easier. Regina in the morning focused primarily on the oil and gas market. Her presentation gave a global view and all the kind of considerations that go into the investment perspective. While India is closely linked globally, but India still has its own nuances. To add to what Nitin said, the opportunities are tremendous in India. I'll come first on the oil and gas part. I had some thoughts, and then to the gas part. The current capacity in India is about 250 million tons processing refining capacity, and the demand projected, you saw in Anish's chart earlier from BP and the IEA, that the oil demand is expected to be about 450 million tons by 2040. So there's tremendous growth despite a lot of the other energy sectors growing. So the need for investment is significant. There's in Maharashtra, there's a refinery. There's some private players who have also kind of indicated interest in more than doubling their refining capacity. So I think the opportunities is first in the capacity, not just the value, like Regina said. And then the Dharmendra Pradhan, Minister Pradhan, also mentioned about the $100 billion kind of opportunities in the sector. So if you consider yourself as an energy company rather than an oil company, and you want to deliver energy to the consumer for mobility, for example, you might use your distribution network for electric power supply to the EVs. So it depends on how you view and what is your vision for the company. Just like Nitin said, instead of an oil company, it's an energy company. So for Reliance, at least now, it's a diversified company because we are looking at retail and with Jio into the mobile telephony, etc. So the investment allocations are very different. But coming back to oil, I think that is a huge opportunity in the gas distribution systems. Again, Mr. Pradhan mentioned. In terms of where the investments might come from, there was allusion by Regina about Aramco, for example, or many of the oil-producing countries are trying to hedge their bets, and not just India, but across the world, they are trying to invest into the downstream so that they have a linkage to the markets. So I think that is something that we see more and more. From the gas front, there's a lot of activity on the offshore platforms in India, but also for imports, we are, besides Qatar, diversifying from several other countries, gas coming in from Russia and a few other countries. US even, Reliance imports a lot of ethane from the US. The other investment avenues are energy going into non-energy use, actually a sink for energy in terms of petrochemicals. So oil to chemicals, typically you had about 8% or 9% of the oil being converted to petrochemicals. But now, for example, the Maharashtra refinery is targeting about 30% of the oil going to petrochemicals. Petrochemicals by themselves are then not used as energy down the road. They are essentially consuming that energy. So there's even a lot of progress globally in terms of building oil to chemicals facilities that convert oil directly to petrochemicals only with no fuels. China has a few plants coming online where I think 70% of the oil goes to petrochemicals. So in that sense, those are other investment opportunities for the oil and gas sector.
Thanks, Pankaj. So you're not worried about the mobility creating gluts. It's the question of creating the flexibility, and it's about the cost structures, as Nitin said, that as long as you keep your cost at a certain level, it's not capacity. You can't do it business as usual, you're saying. Okay, let me come back to the renewable sector, and maybe I'll come back to you, Mohit, in terms of the Prime Minister's vision of the renewable sector is very ambitious, and we've also seen that renewables also impacts basically the coal-based power projects. Do you see how should actually the renewable story in India play out so as to ensure right type of integration between renewables as well as coal-based power, and also the policy environment which will ensure future investments? We've seen problems because of the AP situation as well. So, and there are a lot of people who also from the renewable sector here, and I know that's now important for you as well. So if you can just give a sense of what you see as the renewable story going forward in that context.
Renewable story, I think, is undeniable. What we see is that the goal set by Honorable Prime Minister of 450 gigawatts, if that is the number we all are referring to, we can always debate what time frame, but I think that's already there as a target. So in terms of what is required and probably what will do good to our grid and how we can manage all those things, we can always have a debate that whether it's 450 or slightly lower or slightly higher. But in terms of investment, yes, AP is like the big elephant in the room, but that's not the only issue in renewables. There are a lot of other areas where we find that a lot of global players do look at India slightly differently in terms of how the business will pan out over a 25-year horizon. Having said that, at NTPC, we are quite excited that renewables is going to play out in a larger in a much larger format. And we are quite committed to take it forward on a large gigawatt scale. So while today we may be just about less than a gigawatt in terms of installed capacity, but if you look at it from the other side, we're also managing over 3 gigawatts of renewables as an intermediary procurer. And government on their part has been taking many initiatives, and I probably don't need to read it out to this very august and informed gathering here, from FIT to blending to transmission waiver to now auctions. So we all can have a view that auctions may or may not be serving the purpose, but ultimately, as a consumer and from a government perspective, the cost of renewables which comes into play has to be affordable. And if you look at the auctions happening globally, so while we got 244 lowest about 2 years ago, recently there was an auction in Dubai which got 1.5 cents. So now the debate in India is more how do we reach 1.5 cents rather than 244. But investments is definitely an area where I think everyone is talking about certainty of policy, more particularly the sanctity of contracts. And as NTPC, we are quite clear that contracts are non-negotiable. And so we have to honor the contracts. And we see this entire thing as another, kind of blip in the overall scenario, because this is not the first one. And as, again, I'll refer to the discussions we had yesterday in the panel. Today, AP is very live. But we've had other cases like 5 years, 10 years. In fact, there has also been judicial intervention in terms of coal blocks being cancelled. So the power sector has been, facing up to and getting around all these kind of so-called interventions or obstacles. But I like to quickly also add that as India, we also need to look with renewables and thermal, because that's the point we're trying to cover earlier. So we need investments to get our thermal plants ready also for integration, because that's as important for us as getting renewables into the system, as we need to be ready, how do I meet the balancing power, particularly keeping in mind the intermittency of the renewables. So investment has to flow into renewables, investment has to flow into making our plants ready for renewable integration so that the power supply to the consumer remains seamless. Investment needs to come on the transmission side so that whatever plants are set up are able to deliver power, because quite a bit of capacity on the renewable side is even today facing those issues, connectivity issues. Then, of course, there are other issues on the renewable side, which are land, government clearances. But I would say this is part of the entire game. When we used to set up coal-based plants, we have faced up to all these problems earlier also. And we can always discuss that maybe one state is slightly better than the other, but ultimately, without state intervention, none of this is going to happen. And we probably all accept and realize that land, for example, water, connectivity, forest clearances, the state has to play as important a role as the central government. From the central government perspective, from whatever we have been reading in the reports, we see a lot of proactive measures happening in terms of, for example, you have the government mandate of DISCOMs opening LCs to, in a way, de-risk the payments. They've also reiterated the situation of must run so that there are no curtailments. So all these issues, and now I believe the government has been talking about introducing changes in the tariff policy, which will further make it that much easier for renewable generators also to have their clear role into play. Yeah.
Thanks, Mohit. Nitin, as Shell has also made major commitments in the area of new energy segment of the market, not just recently, but even in the past. How do you see the opportunity in India in this segment of the market, whether it's renewable or any other segment, energy efficiency, you talked about some of the other elements. But do you see that something which at some stage you would get active in the Indian market? And is there something would you like to enable that investment happen?
Yeah, thanks. I think that the conversation is sort of interesting because I don't think the objective was ever renewables per se. And I think that's where, the starting point itself we need to sort of come back and consider. The objective of Shell, which we've sort of come and tried to articulate, is about carbon emissions reduction. And that is the larger underlying problem that exists in the system. And that's why we have energy transition, really, as we kind of talk about it. Renewables and the power side of it is one mechanism to provide energy, an alternative form of energy that is lower carbon. But of course, we have to be very conscious and careful on the well-to-wheel or the sort of the entire life cycle of the particular electron that gets created at the customer side. So that's a particular watch point that we need to be clear on. Well, so as Shell, what we have come back and been very clear about is our net carbon footprint target, and that we will be at 50% of our current carbon footprint target by 2050. But equally, what we have been very clear about is that if you take the totality of what we call Scope 1, Scope 2, and Scope 3 emissions, where Scope 1 is our emissions, Scope 2 is emissions associated directly with our business, and Scope 3 is our customers' emissions in using the products themselves. We have come back and said that we will be at 50% reduction for Scope 1, Scope 2, and Scope 3. Now, in terms of magnitude, that is, Scope 3 is 85% of the total emissions. 15% is only Scope 1 and Scope 2. So that we have taken a responsibility to suggest that we will reduce by 50% the total emissions from our customers utilizing our products going forward, and put that as a stretch ambition and linked it to executive pay for this year, next year, and every year at this point forward, as well as putting intermittent targets for ourselves going forward. That is the genesis of how we focused our minds as to what we need to achieve. From there, we came back and said renewables and power is a big part of it. And that is taking a look at things like offshore wind, solar farms, and also power trading. We're one of the largest power traders in the world, especially in North America, and to take a look at those aspects of it. We've taken a look at solutions that would include hydrogen. We're taking a look solutions that take a look at biofuels, so you can call it molecular renewable, if you will. We're taking a look at nature-based solutions. So how do you actually take a look at afforestation as a solution space? And there's a range of other mechanisms, carbon capture and storage, utilization and storage also fall within this. So a large part of our decision making is driven from the net carbon footprint target down to a range of different options and alternatives that are out there, and what we can choose to offer to the world. Then taking that next argument sort of forward is then comes back and says each one of the critical countries, and there are 9 or 10 critical countries for us, India being one of them, have come back and taken a look at our forward projection as to where we think the energy transition is going to go, where what we think the demand side is going to start to look like. Because in the end of the day, these are all very interesting numbers to come back and say, I will provide X amount of this or Y amount of that. But frankly, it's the consumer that is going to make choices. It's the consumer decision making that ultimately is going to determine what we are going to supply. I cannot come back and force a consumer anymore to choose an ICE or an electric. Right? They will make a choice, or a hydrogen, or a CNG, or an LNG, or a biofuels, or a methanol, or whatever you choose to offer. What we now have to do is to offer a range of choices to a customer and consumer, and allow the demand forces to come back and inform us as to what then we need to come back and do it from an investment point of view. Hence, it was very critical for us to take a look from a countries and from a demand sector to try and define that and be able to create that. And therefore, we come back and said that India is an excellent market for us in terms of where we think the demand sector is. We see absolute potential, not just in the mobility sector, including biofuels and for fossil fuels, because we must be conscious that fossil fuels will also have a role to play going forward, similar to the comments on coal. But there's also electricity, and there's other spaces that's there. So for us, there's mobility, and we are investing quite heavily in that space to build a network that is going to be able to provide a range of different solutions. There's biofuels, which we're all, again, taking a look at in very serious ways, and have already started to make the first steps in terms of investments, both in terms of technology development, which we do in our Bangalore facility, but also in terms of taking equity stakes and creating partnerships in the space. We're taking a look at power across the power spectrum. And we have invested in clean tech solar, so we're in rooftop solar participation. We have taken a look at grid-based power also, and for a variety of different reasons, we chose not to move forward. We were in the last stages of a number of different sort of deals and things that were there. And gas. We have to recognize that where gas is going to come back and play its role, not just in power, but also in terms of transportation and other sort of utilization mechanisms for it. And then, of course, we always we'll join our friends in thinking about things like chemicals and other sort of spaces going forward. So I think what I'm coming back and saying that India is a fantastic country to come back and invest in. This is the portfolio that we're going to go back and take a look at. It's important to suggest that it is all with the lens of a carbon footprint reduction, and that must be guided. The last point I'll come back and make on this is I think we should also not have a discussion about energy transition without sort of coming back and talking about the NDCs of the country, right? Paris and the NDCs really inform us as to what are the things that we need to come back and do as a country going forward. And the genesis of the Honorable Prime Minister's comments in New York were about an NDCs and what is a commitment that India can make and the role that India wants to play in its emissions going forward. And I think it's really important that as we start to take line of sight into an updation of the NDCs next year, that we also start to inform and as to what that updation can start to look like and what are the roles of sectors and the different sectors in the economy, whether it's our industrial activity, so the hard-to-abate sectors, as we call them, aviation, heavy-duty trucking, steel, cement, and so forth, and what are the emission pathways that can be created for those sectors. But equally, what is the pathway for mobility, and what is the carbon reducing mobility solutions that's there. So even if we choose to offer, ICE engines, an ICE engine with an ethanol blend or a methanol blend is a lower emitting source than necessarily something that comes from crude. So what is to be focused in is how do we start to deploy these solutions under a framework that talks about sectorially oriented and updation to NDCs.
Thanks for that comprehensive response. Pankaj, Nitin did talk about the gas, and the minister also talked about India wanting to be a gas-based sort of economy. What do you see as basically there are some constraining factors, including price on that, but there are also certain opportunities and enablers which can move India towards that direction. So why don't you just touch upon some of the the barriers, but more importantly, what are the enablers to make it happen?
Yeah, I think that's a good question, Arvind. I think, I mentioned earlier about the imports coming in. So we are having a diversification of sources of those imports. We have, I think, about 4 terminals which probably need to go up, and there are plans to increase those considerably. That is from the import end. We need a gas distribution system network far more than it is currently to kind of make the gas be available across the country. The internal generation of gas, there's a lot of work on the offshore, onshore, etc. But we should take a leaf out of the US book about shale gas. Actually, the IEA has estimated, just an estimate, but still some 90 trillion cubic feet of shale gas reserves in India. So to exploit that, there needs to be a consideration of what kind of policy is required, what happens to project affected people where shale is drilled, etc. So that is a major area that could be considered. The other one, matching, 2 different areas, clean tech and coal, is coal bed gasification. So you could get clean gas out of those for energy, electricity generation, as well as for fertilizer production, which may free up the other gas available for the other uses of gas. So I think there are some major things that could be done to enhance the clean gas energy economy too. Yeah.
Thanks, Manish. You know, you've been associated with the stressed asset sector for a while. And there's a large amount of, I mean, various estimates from 40 to 60 gigawatts of stressed coal-based projects, including those in pipeline, so to speak. Are there, in, you know, basically some way which we can look at, you know, mainstreaming this through a much faster process than has been, we've seen so far? And are there ways in which this could be attractive enough for investors to, you know, take up? Because you know, there's a large wastage of resources which is there because of this situation. So what can be done on that?
So just Arvind, before that, 1 minute on the question that you asked on a renewables 450 gigawatt now capacity target. I think, you know, my strong view is that it doesn't matter what is the target you set. We are again doing the same mistake what we did in the past. If we are saying two things, which is the tariff is so competitive that you're getting 2.14, 2.44, and if the developers or a private sector investors are making a reasonable returns as per their threshold, why should I need to set up a target in the first place? People will come and invest in. That's what a market does everywhere in every sector. And you see India is a classic example. We didn't set any sectors targets for services sector, for example. I think the fundamental problem here is that you are forcing the target because there is not enough appetite to get to the target, even that 175 gigawatt, because of a structural problems that we have. And I will link it to the stress part, whether it's the distribution side. We said Uday has been a very successful program, and what has happened to Uday, I mean, we all know what Uday achieved. Unless and until you address a structural part, which is on a distribution side, the biggest bottleneck, unless and until you ensure this entire reverse auction, it is only power and the renewable sector which I see world over. If you see, reverse auction has not been very successful across infrastructure sector. I mean, it is only renewables that you really have reverse auction. If the target is so high, you need every player to come in, and there's no need for having that sort of mechanics. That's a need to revisit. The last bit is the entire financing bit. I think India is the only country probably that I've come across when I've worked cross-border, that when we submit a bid, there is no equity and the debt part tied up. You just submit a bid on an Excel model, and after that you start working, okay, let's see where the debt comes from, where the equity comes from, and the entire valuations game start kicking in. I think you need to change those fundamental constructs, and the target will fall in line. That's my personal view. Otherwise, we are setting up in a wrong direction again. Coming on the stress side, I think enough has been debated here. I mean, high power committee, Supreme Court, High Court. Sometimes I feel that this is a subject which is like an orphan subject, where it is reconciled that this capacity doesn't sort of matter, the credit cycle doesn't matter, and by the way, it has an impact. I mean, the chairman of a biggest public sector bank made a statement that we are not lending to power sector, and this includes renewables as well, if you really see what is the sanctions or the disbursements happening, because the fundamental problem, again, still we have not tried to correct. I mean, despite all these committees. To my mind, distribution is something which requires much more than saying that we have opened an LCs. I give you a classic example. The developer tells me that while the LCs are open, but the distribution utility is saying, don't revoke the LC. You need my permission to revoke the LC. So what I'm trying to say is that rather than an optics, we need to really get the work on the execution side on the distribution, which has to really work out. Private sector needs to come in. Whether it is a franchisee model, whether it is a privatization, we can debate that. But unless and until you get a private sector into the distribution side, this fundamental bane of a power sector is not going to stop, and this will hurt your renewable side as well. On the stress, I mean, the numbers vary, but I think you know, the reality is that we are moving towards a direction, whether it is 4 years or 5 years or 10 years, but we are moving towards a direction which is more sustainable energy, and therefore, out of this capacity, whatever is under construction capacity, I don't see a solution for that. We should move on. I mean, the life has changed, it has got calibrated, and I think that has no solution. But what is more important is the operating capacity that is already there, that has the jobs, that is an investments, that we should try to get back into the grid. And to my mind, if the distribution side is addressed and the lenders, which still have that mindset of a balance sheet management, rather than what is the realistic value of these projects now in the revised context, as long as we address these two sides, to my mind, this capacity at least we can save. and I can tell you, I mean, and this I'm willing to bet my shirt on this. I've said that, I mean, unless and until this capacity you save, 3 years down the line, you will see what is the impact of actually not saving this capacity. I'm talking of, just to be correct, the operating thermal power plants which is on the ground. I'm not really cared about now the under construction ones, because that era has gone. So that at least we must try, because that's a kind of a fuel mix that India would need, and you need every form of sort of a power to really address to the energy demand that we are looking at.
Thanks, Manish. I think it's business we can't do business as usual in the current situation. We are, we reached a stage where this has been debated for so long. I think we need to, yeah, I'll come back to you, Mohit. I don't want, we are a bit running out of time. I just want to open, Santosh, where is Santosh? You want to ask some of those debate questions before we get to the questions from the okay, fine. I just want to open, you will have an opportunity to this thing. We are just short of time, so I just want to make sure we don't miss out in case there are some audience questions. Otherwise, if there are no audience questions, we'll come back to it. Yeah. Yeah. Can somebody get a mic too? Please don't make a statement, but if you can just announce who you are and the question, and if you have a person in mind to direct the question to, you can do that. Otherwise,
Sure. My name is Ashay, and I'm an associate director with Renewable Watch. In the discussion of energy transition, one resource that we are forgetting is hydro. And I don't understand why hydro, which holds the potential to creating a sustainable base load, why it gets left out of the discussion, and what is the problem with financing hydropower projects and bringing them out of the stress, despite the recent policy change of bringing it under renewables. Thank you.
You know, I mean, my personal view, I think this is a pity. I mean, I personally feel that hydro is a one source which is very important when you are having such a renewable integration into the main grid, because they serve a very good source for that. I mean, we have a very natural advantage as India as a country as well. And this is very unfortunate that hydro has not been able to come into this. I think, I fail to understand why the government has not really focused on. See, policy making and the regulatory environment and then making it work are three different dimensions to it. I mean, so while you classified hydro as a renewables, but that's not what the sector was looking at. I mean, if I have a gestation period of about 4 to 5 years, and the last 2-3 years I've hardly seen any PPAs coming in, unless and until you really have an offtake, how a lender comes into finance and how as an equity holder is coming to finance. That's a very fundamental premise as to how you really tap this entire thing. Second, I think based on some of the past incidents, the entire, I mean, I don't want to use a word that in a forum like this, but there's a thought process of a core group that whether hydro and what it does to the displacement of people around, the ecosystem, the catchment area, I think somewhere we have got in our mindset this is too big a problem to cater to, so let's move away from that. I think that, to my mind, are the two fundamental factors as to why, unfortunately, despite being one of the best natural resources that we has as a country, we have not been able to sort of pull it in the mainstream.
Mohit, you want to add to that?
I think while what Manish has said is largely currently the situation, but I do agree with you that hydro, particularly with renewables and pumped hydro to be precise, has a big role to play. And I think that's happening because although there are a lot of cases where we have been delayed in terms of gestation period and all, but as more and more renewable comes in, I think the demand also is to have round-the-clock power. And for this to happen, we'll need to look at various storage solutions, and definitely pumped hydro is very much on the table. The issue of time, displacement of people, and all those things remains. But whatever little I've seen, and that's also on our radar as well, because we've been trying to talk to people that where it is possible. So as of now, for example, there's only 1 or 2 situations where we have the PSPs in operation. But they could logically play a much bigger role when we talk about renewables and overall green power ecosystem.
Any other question? Yeah.
Naveen Munjal from CLP India. We're talking about hydro potentially coming into play to balance renewables. Unfortunately, we have upwards of 25,000 megawatts of stranded gas-based capacity already available, which can very much complement, and we are using coal. So I think we're talking multiple things at the same time. We need to get our house in order somewhere. Hydro is probably not even, we've not even dug a hole in anger. And we're talking about, hydro complementing. What about gas, which is already there? And, we're not doing anything about it.
I think this gas story I have been listening for a long time now. So I think let's try to deconstruct it. 25 gigawatt of gas-based capacity, probably all of you know, is combined cycle. That does not have a good role for flexing or ramping. Combined cycle gas power plants in general take a lot of time. So our dear friend Mr. Baba is sitting right in front of me, and he has this very difficult job of handling the grid as more and more renewable comes in. So if I have to ramp up from at a ramp rate of something like 400 megawatt per minute or 800 megawatt per minute, I am not sure combined cycle gas is the most suited option. This, without taking into consideration that gas as a fuel remains much, much beyond the economic threshold which we are willing to accept. So while I do get the point, operating gas turbines on open cycle mode is akin to wasting a lot of energy, a lot of molecules go into the air. So that's why I think coal with balancing, hydro with all its so-called frailties and timelines are probably a better consideration zone than CCGTs.
I might take a bit of a different view on that one, if you don't mind, Mohit. So I definitely agree with the combined cycle point, and certainly I think obviously open cycle as a better response as a balancing solution. That doesn't mean I don't think that gas has a role to play. I think that it just means that it does mean that it is less efficient in the role that it plays compared to an alternative technology of gas. I think that the sense of economics is also a story that has been overplayed far too much. Today, you can actually be quite competitive on gas-based power because gas is quite cheap, right? The problem is the uncertainty that exists with the gas pricing going forward. So could you come back and say, for example, that today's prices in gas are going to be there for the next 5, 10, 15 years? That's the problem that exists. And I think there are mechanisms that can be put in place that range bound the upwards and the top and the tail of the gas pricing that makes it very competitive as to where it needs to be. Equally, we've taken a look at this a number of different times along the way. By the time you actually get your gas, whether it's imported LNG or anything else, to cut across the country, right? And with every state wanting to add its little cut of the pie along the way, this taxation and that transmission and charge and all. Well, by the time you get there, you've paid better part of 60% of the cost on just trying to move the gas within the country itself. Forget the gas itself. So the molecule doesn't cost that much. It's more the structure that we've created on top of all of this. So by the time the molecule reaches, that creates half the problem. So I don't think that there are no solutions to go address this. There are hard solutions to go address. I agree. I also agree that I think this is one of the things that we need to get our heads around and really start to think about. The final point I'll make on gas is the reason why gas starts to become, is a comparative to coal, and I think that there's no need to even have a comparative. I'm not quite sure why we need to have a competition between the two spaces. Coal has its role to play as an economic solution for a large part of the country that, frankly, the rural outposts that needs cheap electricity to be there. But let's be clear, this city, Lutyens, Delhi, does not need coal-based power from a cost point of view. It can absolutely afford gas-based power. All industrial activity in the country and commercial activity in the country already pays a massive premium for its electricity, and it can afford gas-based power. So we have created structures that do not allow the supply source to meet the demand that actually is ready to pay for it. And those are the blockers in the infrastructure and the power policy and that we have created that prevent actually the viability of the whole thing. So I agree very much with Manish that we need to get our act together and power sector reform, whether it's the 2003 Act, the 2013 Act, or now I hear of 2019 Act, choose an act, we just need to go and do it.
Thanks. I think we'll have to probably
we've run out of time.
We run out of time. Sorry, you can talk to some of the panelists at around lunch, but I think we're just.
So
it's a very interesting discussion, and this can go on forever. But
so I'll just put up the poll question. So in case you can please put it up. We have 3 interesting questions, which is sort of been discussed through the day, but I would like the audience view. By when is India likely to have more renewable energy generation than coal in its electricity mix? That's the first question. Which among these is the greatest barrier to attracting investments in the energy space, in the renewable energy space? And the third question is, what is the most important enabler for Make in India in the clean energy space? So it's there on your apps, and if you could just download and give your opinion on this, that would be much appreciated. Thank you. I'll now invite Manish to hand over mementos to the panelists, please. That's a big one. One photo session, yeah. Thanks, everyone. We can now break for lunch. Please be back here before 2:15 when the next session starts. Maybe by 2:10, if you all could be back, that would be much appreciated. And if you could please take the time to go up and see the digital lounge. I'm sure there'll be some interesting things which you will take away from there. Thank you. Yeah, I think the same hall is opening up for lunch. Lunch is just behind. Thank you.